And that's when I developed my chart. The answer came to me is because, just like Caterpillar, when they pull their money out, you get out. Whoa.
It's your daily dose of how to manage your money. And now it's time for Phil's Gang on the Off the Wall Street Network.
Oh, God. Are you nuts?
With your host, Phil Grande.
Bye. And welcome to my podcast. Well, we have a lot going on today. First of all, we see that Iran is now threatening to contaminate all their drinking water or do something with it like that. That's bright. That's really good. Today, the stock market, everybody was all excited. Oh, it's over for the tech. It's over for infrastructure tech. It's over for the stocks that build there's 4 stocks that keep this whole stock market going. The ones who build the chip machines. Those are the ones that make all the chips. But what was interesting, on the opening, tech went down. The chip machine makers went down. And so did the infrastructure stocks go down. And stocks on the Dow, like Coke, went up. What are you nuts? So I told everybody this morning, I sent out an alert, and I said, remember, you got to be careful here, even though they're calling for this rotation now, because what happened was, why this all got going, or one reason why it's got going, is yesterday. We started out with yields at 4.45, then 4.49, then at the end of the day back to 4.45, and then this morning 4.47. So they're all saying, oh, all this volatility, right? So that's showing that we're going to have this rotation. Well, it didn't quite work out that way because, again, if you go and look at just a couple stocks, you see they gave it all back. And if you go look at any of them that they had today, like let's just take, if we can have Coca-Cola. Let me see if I can do Coca-Cola here. Coke. So Coke had a big rally, right? And then it collapsed. And then this morning we had ASML, okay? It dropped, but it went back up. So the stocks this morning that dropped, the tech stocks, all dropped, and then the old boring Coca-Cola and the Dow stocks went up. That didn't make any sense. We got too much money already invested in AI, especially building out these centers, these data centers. How could this be a rotation? It's stupid. It doesn't make any sense. So just today, just a few minutes ago, we're looking at the charts. Exactly what I said is going to happen. So Coke that was firing on all cylinders pulled all the way back. I just showed you on the chart. And the tech stocks, especially the 4 chip machine stocks that were pulled back earlier this morning, all back up. Look, this is silly, okay? AI, one day we will know, and we'll know when to sell short. We'll know when it's over. But it's far from over when you have trillions of dollars already being paid to build 30 data centers, and you have the companies, the infrastructure companies, the AI infrastructure companies, who build all the plumbing for these 35 data centers or buildings, and they've already been paid, their earnings are already locked in. How could anyone believe it's over? We'll know when it's over. When money is gone for infrastructure, when they stop investing money in infrastructure stocks, then you know, let's start shorting. So this morning, there was no signal for that. And anyway, so we'll go over some more of those numbers. The other thing that happened today, they keep telling us how strong our labor market is. Right here, listen to this cut.
We think the labor market's in much better shape than most people give it credit for.
Oh my God. It's unbelievable how these people lie. Really? Play it again. Okay. So the number of Americans filing for unemployment benefits for the first time has jumped to the highest in 3 months. Willie, can you play that again?
We need the labor market's in much better shape than most people give it credit for.
Yeah, but just happened to be the number of Americans filing for unemployment benefits for the first time jumped to the highest in 3 months. They keep calling the labor market strong. It's not. It's a lie. The growth is coming from low-paying, part-time, and government jobs, not full-time, not high-quality jobs with benefits. I mean, 2 things went on today that were so stupid. You can't believe a thing these people tell you in Washington. You can't believe the people they tell you in Wall Street. I mean, it's unbelievable. I always tell my gang members, look at, the one good thing I love about trading, all you got to do is follow the institutional money. In 2008, they made it so easy to trade. Before, you had all Wall Street always lying, using fundamentals. They'll pick some fundamental out, use that fundamental to create a story. And people would buy into that story. So, and when they bought into that story, they thought, oh, I'm going to make a lot of money because after all, look at this. No, they took a fundamentals, let's say it's the PE ratio, or let's say it's free cash flow, and they'll make a story out of it. And then everybody jumped in that stock because of storytelling. Well, that stopped in 2008 after the market dropped 54% and we lost $8 trillion. It should be. These people should have been in jail. The same people should be in jail to tell you cost average down. The same people tell you don't short. They all should be in jail for life. They destroyed more people. I mean, think about it. How could anyone say that Wall Street does a good service for you? Are you kidding? When 80 to 85% of the people lose money in the stock market? How are they doing a service for you when you take the S&P, we get solid returns in and out every year at 10%. 10%. And then they lie to you with 401k so you're going to get a 6% return. That's a full-faced lie. You don't ever get a 6% return. It's the hidden fees that take 3.5% away from the 6%. But people don't even think they have fees. They put out a survey and say, do you think you have to pay fees? Oh, no, we don't pay fees. So people in 401ks are getting screwed. And then the other day I told you that when the president came out, boy, look at our economy is booming. 401ks are up 36,000. Wait a minute. For who? For who? Are you talking about the guy, the husband and wife, combined income, 65, 75, 85,000? Their 401k's not up. If it was up, they took all the money out, or most of it, to survive. The only people who are taking advantage of a 401k who's doing well, that's up 36,000 this year, are the top 1/100th of 1%. Not even the 1%. The 1% are even getting hit. But let's put them in there. The top 1% and the 1/100th of 1%. Those are the ones that are benefiting. So let's move on. So this labor market is such a bunch of BS. They're counting the wrong jobs. They're counting the low-paying part-time and government jobs. So the headline number, when they give it to you, will look strong. That's what they do, because it includes part-time jobs, multiple job holders, low-wage service jobs, they include those, government hires, health care, social assistance, which is ridiculous. These inflate the numbers big time so they can lie to us. But they don't reflect the economic strength of this country. They don't. It's amazing. Full-time jobs are not strong. They keep telling us they're not. They're declining. They keep telling us they're not. They're going up. That's a bunch of BS. Full-time employment has been flat to down. All replaced by part-time, replaced by multiple job holders. A strong labor market does not have multiple job holders, does not have a whole bunch of part-time people replaced in full-time people. That's what's going on. Our full-time jobs are getting replaced by part-time jobs. Wage growth is not strong. They say it is. No, it's not. Inflation is higher than wages. But they lie all the time. Oh, no, it's not. Wage growth is slowing. It's been slowing. Real wages are negative when you figure in inflation. What are they talking about? New jobs pay less than jobs that people lost. That's not strength, that's weakness. What are you, nuts? Hours worked are falling like a flying crowbar. What are you, nuts? That's a recession signal. So employers always cut hours. It's the first thing they go at is hours. That's the biggest expense. So they're cutting hours before they cut people. So that signals a very big weakness. Now, so the jobs are being created are the wrong kind of jobs. But they're not going to tell you that. They're healthcare, social workers, government, crappy government. They put a guy out in the middle of the forest out there to go find Smokey the Bear and cut his fingernails or his claws. I don't know what the hell they do. But these jobs aren't big manufacturing jobs. They're not construction jobs. They're not good paying finance jobs. Nobody's getting those kind of jobs. You can go out in the woods with Smokey the Bear if you want, but you're not going to get a big job on Wall Street. Consumer delinquencies are rising everywhere. Look at the credit cards, auto loans. We just talked about small business bankruptcies are up over 67%. So that's a bunch of BS. So I want to talk a little bit about what happened with the market here today, because this is embarrassing. I'm not embarrassed. Wall Street should be embarrassed, because I said to my gang this morning, I said, look, we're starting to see this morning they're going to push the Dow 30 stocks. What the hell are they doing that for? That made no sense. So yesterday, as I said, by the end of the day, yields dropped. This morning, yields were back up. Now, what is important to understand why yields go up? People that trade stocks, they have no idea why yields go up, and that's why 80 to 85% of people lose money in the markets. They have no idea how the market works. So you got to know, got to have a total understanding before you trade a stock, before you invest, why yields go up. Because yields are everything. Yields are everything. Now there's a difference between yields and interest rates. People get that totally confused. Interest is what the Fed charges to banks overnight. Those are interest rates, not yields. Yields are what you get paid if you're going to loan money to the government. And yields identify first if the market's going to crash. It's the first thing, or it's going to correct. You always know from yields, never wrong. And then you know from small mid-cap stocks, IWM, never wrong. Those two send you a signal, and they're always right, never wrong. So what's important is to understand why yields are going up, because when yields are going up and oil is going up, you're screwed. You should be buying stocks when oil is going up and yields going up. And what happens, they keep putting more and more of your money in 401ks, and oil's going up and yields going up. And the guy that's running your 401k has no idea what happens when yields go up or what makes it go up. So yields going up hurt our best stocks. We have 12 stocks that are running 700 stocks. The stock market's up about 17%. 70% of that or more are from 12 stocks. Think about that. So, to understand why yields are going up, because that high yield, if you get into a stock, you get into a tech stock, yields start going up, and they tell you to buy the stock. It's a hot stock, like I hear every day on just, from Kramer or from that other guy. Look, the TV jibber jabbers say yields go up because of the economy's growing. Flat lie. It's a flat out lie. They will tell you every day, oh, yields are rising. It's a good thing our economy is growing. I don't care if Kramer would tell you that. What's this other kid's name? Charles Payne, all these people. It's BS. It has nothing to do. No. Not true. So, again, the TV jibber jabbers tell you yields are going up because of growth. That's not true. It's inflation fear. And anytime you get a hint of oil going up, any kind of disruption in oil over in Iran, that's what makes yields go up. It's anything that will push inflation up. It's that simple. It's that simple. It's fear that will push inflation up. It's fear that pushes those yields up, not growth. So inflation, that will push your yield up. Higher oil price, push your yield up. And when you know that, then you know what stocks to be in, you know what stocks to buy, what stocks to short. People just blindly keep buying stocks, putting money in their 401k, and they have no idea. Hey, wait a minute, I better check, see if oil's up. I better check and see if the 10-year treasury yield's up. Because if they're both up, I should be putting more money in my stocks. Yields are so important. So important. So I'm going to stay on here a little bit, and I'm going to just explain about these yields, because I think it's so important for you to understand what's going on, because everybody's lying to you. So these yields, as I said, what is driving your 401k? I heard Trump say the other day, 401ks are up 26,000, 36,000. What stocks? There's a handful of stocks. A couple of stocks are pushing your whole 401k up. That's right. That's right, just a couple of stocks, maybe 2-3 stocks. That's what your 401k, and when those stocks get hit, you're going to lose all your money in your 401k. Wouldn't it be nice how to short? Now, they won't let you short your 401k. Oh, they don't want you to do that. But you can hedge. So when your 401k is going down, you're not losing money. We'll show you how to do that. So yields are so important. Our whole system in the stock market is about yields, not rates, which is what the Fed charges the banks overnight for money. Yes, that's important, but as a trader, the yields are important because, again, think about our deficits. Our deficits are two trillion per year. Per year. Think about that. That's nuts. That's insane. So we spend 19 billion a day. We only collect 14 billion a day. We have a deficit 5 trillion a day. So what do? We got to go out and sell treasury. We got to borrow money. We'll give you this piece of paper called the treasury. So that's a deficit. We're in a hole. I mean, think about this. 18 billion a day is our deficits. 18 billion a day. So that will cause yields to go up. So when you're trading your stock, shouldn't you know that? So there's only a couple stock groups that you should have your money in until it's not working anymore. It's the infrastructure stocks. The infrastructure stocks. Those are the most important because those are the only stocks you can look at right now and know positively they're going to have good earnings at the end of the year. These are the stocks that build out the plumbing in all these centers, data centers. Those are the stocks that you need to be in. And today, I couldn't believe it. Wall Street's telling people to get out of the infrastructure stock and buy Coca-Cola. Are you nuts? How'd that work out at the end of the day? Let's check. Let's check right now and see what happened. I mean, I couldn't believe what was going on this morning. So let's take ASML. So ASML opened up this morning. Okay, now ASML is one of the chip. They make the chip machine that makes the chips. There's 4 of them. And you got to be in those stocks. Or you're never going to make money in the market. So we had the stock was at a high this morning. When it opened, it was up about, let's see, what was that on the high? It was on the high this morning, 1,779. And then when it opened, after it hit that 1,779, it dropped to 1,672. But Coke, on the other hand, another Dow 30, okay, those stocks went up from $77, let's say, okay, opened on the high, opened at 79.62, it went up to 80, right, and then it pulled all the way back right now as we're getting towards the close to 77. So this is, now let me tell you why they do this. Think about this. So Coke opens up this morning high. Everybody on Wall Street's telling you to buy the Dow 30 stocks. You've got to get out of your AI 4 big machine stocks, and you've got to get out of the other infrastructure stocks and buy Coca-Cola. How stupid is that? Okay, and some other Dow 30 stocks. Then people did. Did anybody check inflation yet? Inflation's not coming down. Oil's still at $94. I don't know what to say, 93, 94. Until oil gets below $80, you're not going to get inflation down. So think about that. Oil gets below $80, you're going to have inflation. That means the yields are going up. Higher oil, higher inflation. And then you're buying stocks that you don't even know how it's affected. Is it affected by inflation or not? Is it defensive? Is it defensive stock? You don't know. You just trust somebody on Wall Street who filled up your 401k with a bunch of garbage. So again, why they do this on purpose? Because Wall Street, the biggest banks, the biggest guys on Wall Street, they want to buy more of the 4 chip machine makers, those stocks. They want to buy more of the infrastructure stocks, the stocks that build out the data centers. But the prices are too high. So they'll do what they did this morning. They financially, okay, engineered the market this morning to try to get people to dump the infrastructure stocks, okay, and the machine building stocks. So in other words, they're trying to get people to drop ASML, or they're trying to get you to drop CLAC. They want you to get rid of those. Those are one of the 4 machine makers. Or they want you to drop today. They want you to drop, let's say, Sienna. Get out of Sienna, or they want you to get out of ANET, or they want you to get out of Micron Technology, because they want to buy it at a lower price. So that's what they did today. So they got everybody dumping their best tech stocks and to rotate into these stupid Dow 30 stocks like Coca-Cola. Now, some of these stocks will do well, like the bank stocks went up today. You should be buying bank stocks. Okay, they're going to go up. Here, I'll show you what I'm talking about. Banks are going to go up for a while, but bank stocks are dead. They're not making profit. Look at, before you buy a bank stock, and you got to look at it long term. I'm not talking about day trading, okay? I'm talking long term. When you look at the first thing you want to look at, okay, is, are the stocks safe? These bank stocks, are they safe? Well, you can find that out by all you have to do is look up credit spreads. And as long as those credit spreads are plus 77, plus 90, the banks are safe. Okay? They're not going to fall apart like 2008. But this is the more important one, the yield curve. The yield curve's got to be at 150. It's minus 44. So that means the banks aren't profitable. So they got you buying banks today when they're not profitable. Now, I don't mind if you're doing swing trades or you're going to be in a stock for 2 days, 3 days. That's all right. So let's go through the banks here, see how well they're doing today. So they got everybody into the banks today, and you watch what will happen. These are called snapbacks. And we teach all this. You should join our gang. We teach this. So let's go to the banks here. Then I gotta, okay, here we go. So let's take a look at some of the, okay, look at JP Morgan, okay? So JP Morgan shot up today, okay? You got, let's see, Citigroup, that went up today. Now Goldman Sachs, those are going up for the right reason, Okay, remember, first of all, the stock market, the Dow, is not going up for the right reasons today. When the Dow was going up this morning, everybody's jumping in the Dow. Dow is up for the wrong reasons. Up for the wrong reasons. So you got to understand that. So these banks that started to rally today, they're going to come right back down. They're going to come right back down. So if you got lucky and you're in one of these banks today and it gapped up for you, then take some profits and reset your stop. Look, all I'm saying to you is this. If you're going to trade stocks, you got to understand, one, relative strength. You got to understand how to sell a stock short. But most of all, you got to understand what makes a stock go up and down. Yeah. And what helps a stock move up or down? What makes stocks actually move? And once you understand yields in oil and how that works to move your stocks up and down, you're 75% of the way. But the reason that 80% of the people lose money because they don't know that. They have no idea what I'm talking about. So all I can tell you, if we have deficits of $5 trillion a day, or we're spending 5 billion a day, and we're spending I think is spending 19 billion a day, and we're collecting 14 billion a day. So what's that? 5 trillion? 5 billion? 5 million? I keep the millions and the trillions. Sorry about that. The 5 million. So you can't be in the hole 5 million a day. I think the market's going to do well. So, but the market, remember, is financially engineered every day. So the things that you think will help or hurt the market, like deficits and budgets and all the stuff they talk about, there's nothing to do with it. It's all about, is money going into these Dow 30 stocks? Is money going to go into the best 12 tech stocks? Whose money? The institutional money. And if you can understand how the institutional money, and you can understand how to follow the money into the stocks, and you understand when the stocks are going to go down or stocks are going to go up based, okay, on inflation, based on yields, then you got it made. That's 3/4 of the battle, is understanding how stocks go up or down. And what affects the stock going up or down? Oil, yields. Once you got that, the rest is pretty easy, okay? All right, I'll see you on the charts.
Are you nuts?